Good morning. Welcome Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of November 17th, 2025. Let's get started. SEAF signals for this week. We retain healthcare, which is one across the board with a overall ranking of 3. That is the highest ranking you can get in the SEAF model. Second in line here is energy, coming up with 2s on the trading week and tactical month, and a 3 on the strategic quarter with a nice high score of 7. And for the first time in a long time, we have a neutral signal in financials. Now, the way the SEAF model is back-tested, it is always the top 3. So it being neutral versus favored does not necessarily matter in this particular case, and the way we're using it is traded as a model. Why is that happening? We had a very strong flipping of flows. So there was a very strong outflow of financials. If you recall, financials is at the bottom for the last couple of weeks, maybe even potentially a month. And we had a flipping of the model as money has flowed in. It has not flowed in fast enough out. We've had a bunch of kind of mixed bags here with medium scores here on the strategic quarter, higher scores here. Things are kind of getting shifted around here. What we do know is healthcare and energy are extremely strong, and financials is trending in the right direction, 10 to 4 to 3. So that is a positive note. Communication services sitting here at the bottom, and technology continuing its fall with a reversal. In terms of a direction. Normally I like to see us accumulating numbers as we go from strategic month to week. This is the reverse. 2 on the strategic quarter, 8 on the tactical month, and then 11 on the trading week being our worst sector on the weekly side of things. Another thing to note, just because it's here, why we have 2 rankings of 17. Why is financials chosen over industrials? And the stepwise part of this model is if we have a tie overall ranking score, you go to the trading week. Financials is outperforming industrials in terms of its money asset flows on the trading week. Financials with a 3, industrials with a 6. Going into our heat map. Obviously, you can see healthcare is doing extremely well, 0.63 on the trading week in terms of its inflows. I haven't brought this up in a little bit because we haven't had it in a while because flows have been kind of inconsistent outside of probably technology, which is now obviously on the downflow. But 0.4 is a significant number in terms of inflows on a trading week. They tend to be a little stickier, tend to show a little bit more conviction when we have 0.4 or higher. We're at 0.63 here for the trading week on healthcare, and dark green across the board. Energy looking good as well, 0.28 on the trading week for a 2. That's pretty solid. And again, trending in the right direction. Energy was at a lower point, had a little bit further to go, but we are seeing some real strength here. 0.11 on the inflow for the trading week for financials with that, like I said, that positive skew in terms of ranking. So that's good to see. Outflows of negative 0.38 for technology, so near that significant mark. And then something interesting with consumer staples showing a little bit of life, but not seeing a lot of flows. 0.01 on the trading week for that 4, but is in that positive skew. Consumer staples would be a place to kind of keep an eye on. I didn't even bring the rainbow chart in because there wasn't enough flows to really make that happen. But I do like to see that skew, so that is something that we're going to keep an eye on going forward. Overall, 0.351 increase in all 11 sector spiders in terms of the net flow in for last week, with 3 of 5 days up. With that being said, though, Thursday and Friday had an outflow of 1.5%, so things started to kind of shift toward the end of that week. I think that kind of weird dynamic where we had a 1% inflow on Monday of last week and a 1.5% outflow toward the second half of that week caused the kind of crazy turning here in terms of the heat map. We're seeing a lot of red outside of the top here. Next, just to highlight, this is our sector spider total AUM chart. I've really liked this chart over the last year or so, bringing it up over the last 6 months here for you for this video. It does a really good job. This is if you add up the 11 sector spiders AUMs, and put them into one number, and then you run this 21-day moving average over it. It has done a pretty good job of telling you directionally where the market goes. If we can see here, it highlighted that asset flows were starting to come out pretty aggressively in late February. So this predated the big April drop, but kind of highlighted this down move here that you can see through March and April. Nothing so extreme yet. As we can see here, we broke down through that 21-day moving average. We have so on a couple of occasions, so nothing significant yet. But as you can see here, as we kind of spend a little bit of time near that 21-day moving average, you can see the slowing in the market. It starts to go a little bit sideways. A true breakdown from here likely could result in a little bit more trouble for the S&P 500. So we are not in doomsday territory per se, but things are slowing down enough to break that 21-day moving average. Interesting to see where we'll go in from next week. If we can have a little bit longer of a sustained move, then some of these are just a couple of days long, or in this case a week or so long. So keep an eye on this space. This is one of my favorite charts this year, and we'll continue to highlight this in this video. Heading into our rainbow charts, financials. As we can see here, a nice relative outperformance, kind of bouncing off the bottom here. We were a deep avoid just the end of October. Just at the end of October. So just looking at this, driving up aggressively into neutral. If asset flows continue, we will start to peel off some of this deep avoid that we were having that resulted in this really kind of down relative underperformance versus SPY. We have a little bit of a resurgence here. We would need to see continued flows. Financials third on the trading week, so anything sustained there would show some positive things for financials, but we are headed in the right direction, a bit not into that favored. We are seeing some relative performance turn though, so that is encouraging for financials. Energy. Energy's done this to us to a handful of times here where we kind of jam up, going up into pretty strong asset flows. You can see the slope of the move. That's aggressive asset flows coming in, as we can see for energy. 2 on the tactical month, 2 on the trading week. Getting itself in really into upper favor. A score of 7 is pretty strong. We see that correlation with some nice strong relative outperformance versus SPY, but we have seen this before a couple of times where we have little brief run-ups and really haven't seen anything in a sustained favor. I really would like to see, as we do have a downward sloping relative outperformance versus SPY, meaning that relative to the broader S&P 500, energy just has not kept pace. So it would be nice to see, if this is an undervalued asset, to get some sustained favor and kind of run this horse for a little bit longer than we have. But if not, we will take advantage of the strong money, and SEAF. That's what SEAF does. It gets you in and out. If the money's sticky, we stick in those positions. If that money rushes in, we get in. And if it doesn't work, we get right back out. So we've done that a handful of times with energy. Going back this year, once it looks in January and March, doing this again. So again, money flows in really aggressively. If we can sustain this relative outperformance chart will do better for us. If this money flows back out, the SEAF model will re-rack and we'll find another opportunity where money is flowing in. That's the name of this game. Tracking that money as it's flowing into these sectors, being tactical with it. If it sticks, we stick. If it leaves, we leave. We don't want to be with a horse that's not winning. Right now, energy is coming in as one of the lead horses. Healthcare, our lead horse. Starting to get that sustained favor. What is that doing for us? Nice, strong relative outperformance. Really going back since we hit that favored mark and the end of September, early October, and we've been strong. Nice, strong relative outperformance. Looking like we are coming up on touching this relative outperformance resistance level, but things are looking strong. Very strong asset flows into healthcare through all 3 time periods. Like I said, a ranking of 3 that is as high as we go in our SEAF model. So really strong. Healthcare looking extremely strong at the moment. Last but certainly least, communication services sitting now into that avoid for looks like 2 weeks or so, and this slide from grace after having a nice long run in that kind of neutral favored area. So really starting to break some relative outperformance. We had with that kind of sideways box here going back really to December of last year. Breaking down through that on the relative performance versus SPY. Communication services is not a place to be, deep avoid, and we are really starting to the beginning of an underperformance trend here in the relative outperformance versus SPY part of the graph. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.